Let's talk about a lot of results that have hit our bourses. One of them is South Indian Bank. The higher cost of funds actually led to a bit of compression in their NIMs the third quarter, while other income aided their net profit growth. We do have Mr. P.R. Seshadri, who's the MD and CEO of the bank, joining us now to discuss the numbers in detail. Thanks a lot, Mr. Seshadri, for joining in. I wanted your thoughts on two things. One is loan growth. You did about almost 11% in terms of advances growth. What was that comprised of in terms of loans to corporates and loans to MSME and retail? And what explains the decline that we saw in net interest margins? Because I remember the last time you joined, you expected the NIMs to hover around the 3.5% mark itself.
Thank you very much for having me on the show. Our growth is actually driven by three factors. The first area of growth is corporate. The second area of growth is personal loans and cards, and the third is gold loans. So majority of our growth has come from these three areas. On a year-on-year basis, corporates have grown north of 30%. Personal segment has grown approximately 13%, and gold has grown at the rate of 18%. With respect to your second question, which is NIMs, our NIMs last quarter to this quarter have dipped by approximately 10 basis points, essentially on account of the fact that repricing of liabilities has been faster than our ability to pass on the cost of liability growth. This is something that we are working actively to staunch. Our asset book is so positioned that our assets are relatively shorter duration, especially to the corporates. And we expect that as the interest rate cycle moves onwards, we should be able to pass on some of those costs to our companies that borrow from us.
Right. Mr. Seshadri, good morning. Thank you so much for joining in. My question to you is on asset quality. And the last time you joined us, you had mentioned that you are expecting by FY24 end, you're expecting the gross NPA ratios to come down to 4.5%. You're currently at 4.74 at the end of the December quarter. Do you see that going down to 4.5 by the end of the year? And do you see that trickling down further as we go into the new financial year as well?
Our gross NPA ratios as well as net NPA ratios have been trending down sequentially quarter upon quarter. And that trend line is something that we expect to continue. The exact dates by which we would go below 4.5 on the gross NPA side and below 1.5 on the net NPA side is something that we've not really computed as of yet. But we're very confident that the trend line that we've established over the last few years will continue.
You said cost of liability growth is hurting net interest margins. Your deposit growth quarter on quarter has been rather weak as well, just about 2.1% higher. How will you plan to drum up these deposits, and will they come at a further higher cost and thereby, perhaps causing further compression to your NIMs?
Our deposit growth rate has been predicated on the asset growth. So we grew 11% year on year on the asset side and 9% on the deposit side. We've kept a tight lid on deposit costs. So if you were to compare our deposit costs with that of our leading competitor in this market, you'll find that we are substantially lower than them. We intend to keep that as a key element of our strategy, and we'll moderate both the deposit as well as the liability side. I mean, the liabilities as well as the asset side in such a fashion that we keep the NIMs at a reasonable level.
What is reasonable? Is it 3.5? Is it 3? Is it 4? If you could define a band which is reasonable according to you.
We expect to grow both assets as well as liabilities in the early teens in the year ahead. So that's the number that we're looking at.
And for NIMs?
Mr. Seshadri, could you share a number on what is a reasonable level for the NIMs that you mentioned? You expect it to go at reasonable levels. What's reasonable according to you?
Our NIMs last quarter was 3.19. As you rightly mentioned, that there is an increase in cost of funding, which is translating into lower NIMs. That pressure will continue. So our aim for the present is to ensure that the NIMs stay where they are, and over a period of time, revert to our longer-term stated goal of getting to 3.5. But I think in the near term, that pressure will continue, and our aim is to stay where we are and then move upwards.
Right. Mr. Seshadri, just one question on the Reserve Bank of India as well. Has the central bank communicated to you about mentioning the CD ratio to be at 75%? Have you received any such communication?
No, I have not received any such communication. Our CD ratio is at 78% at this point in time, and I think we are very comfortably positioned. We also have, reasonable excess SLRs so that we remain an extremely liquid institution.
All right. And your risk-weighted, assets to advances ratio has also increased from about 65% to closer to 67%. Is it because of the RBI circular? Could you give us a sense of what explains this jump?
It's a mixture of both. Assets have actually grown a little bit, and also the impact on the risk weight increase, as a consequence of which our CRAR has dropped a touch. So we are now still a very well-capitalized bank at 15.6%, but we used to be in the 16.5% and above that earlier.
You're speaking about growth in early teens, and your CRAR has come down a little bit. Does that triangulate to you perhaps looking at some sort of fundraise over the next 12 to 18 months or so?
We always examine all possibilities, and at this juncture, I'm not at liberty to talk about this and no decisions have been taken. So I think it's a moot question. Unfortunately, we'll have to wait for discussions at the board level, and at which point in time we will ensure that the exchanges and the general public are appropriately informed.
All right. So that's...
All right, Mr. Seshadri, we'll leave it at that. Thank you so much for joining in and sharing your thoughts on the earnings of the quarter gone by. Wish you good luck for the rest of the financial year and for the times ahead as well. That was the management of South Indian Bank. The stock currently trading higher by about 1% post its results.